Thank you very much. Good morning, everyone. I'd like to thank Tanya and Traders Talk Live for hosting this event. My name is Gary R. Albrecht. I'm the founder and CEO of, just one second, I'm on pause, 1 second. There we go. Now we're live. Let me start my recorder. Since we're a little early, get that started. Okay, good morning, everyone. Again, I'd like to thank Tanya and Traders Talk Live for hosting this event. My name is Gary R. Albrecht, founder and CEO of GPA Trading Services. I'm the creator and mastermind behind the Market Price Anticipator software. I'm also the educator and instructor. A brief bio. I've been a professional trader for 20 years. I'm considered a technical analysis expert. I'm the creator of a one-of-a-kind custom trading software. We founded GPA Trading Services over 8 years ago. We've been educating thousands of students around the world, conducting live events, speaking engagements, a platinum program. We also offer one-on-one coaching and mentorships. If you haven't had a chance to peruse our website, this is GPA Trading Services. We welcome you to do so. Today's topic is analyzing the markets from a multi-time frame perspective. And before we get started, I'd like to briefly go over a disclaimer, highlighting a couple of points. First, trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should only use funds that they can afford to lose, that fits within the overall financial plan as developed by a qualified financial planner. Never risk more than 2% of your entire account balance on any one given trade. For options traders, never risk more than 5% of your entire account balance on any one given options trade, and always adhere to strict money management rules. And finally, all information in this presentation is for your educational purposes only and should not be taken as investment advice, nor as a recommendation or endorsement to buy or sell any specific investment. We're going to trade at your own risk. Key components in anticipating future market conditions: support and resistance, trend direction. The direction of the trend is always important. Utilizing multiple time frames, and as we will discuss today, the key of utilizing multiple time frames is to align those time frames prior to trading. And then understanding the concept of how the lower time frames cycle within the larger time frame, or as we like to refer to it as a line of progression. Well, to give you some insight what this means, we're going to go over a couple of things. First, we want to align our time frames. What does that mean? In this example, we're using oil, and you see we have a daily chart, a weekly chart, and a monthly chart. And notice the indicators are overbought on a monthly, they're overbought on the weekly, and they were overbought on the daily when this process started. So what we mean by aligning the time frames, as you can see, we want to align those time frames so that we manage the weekly, daily, and monthlies. And once they're aligned, that's when the big moves start to set up. And that's the key. You want to align the time frames and look for the big moves. Well, someone would say, well, what if I'm not a long-term position trader and I just want to be a simple get in, get out of the market scalper or a day trader? Well, then you would align the lower time frames, but the concept is the same. Now, why is aligning the time frame so important? Because in this example, here's oil again. When our monthly was overbought, our weekly was overbought. And notice when you align the time frames, it will exhibit very specific behavior. And if you'll call your attention to my red cursor, we'll see that when the daily was overbought, the weekly was overbought, the monthly was overbought. So as the daily started to move lower, price started to move lower, but notice this repetition. We call this a slingshot phenomenon, where the daily would go against the weekly for a while and price would go up. But then the daily is forced to switch back over to the downside in the direction of the weekly. And you'll notice it does this repetitive behavior. We call that a slingshot phenomenon, where the lower time frames are forced to go into the direction of the higher time frames, as we were watching the weekly turnover and a monthly turnover. And notice how many times this process ended up taking place where it would slingshot lower. Well, all that is, again, is just think about the cycles of those time frames. The daily was cycling back up against a weekly down and a monthly down. Then the daily was forced to cycle with the weekly and the monthly, then against, then with, then against, then with, and that's what we call the slingshot phenomenon. And notice it does repeat itself multiple times throughout the process. And this is just a downtrend continuation mode. So this software is known for trend trading because it sets up all the time frames. All right, here's another example, and this time we're using a currency pair, the pound dollar. Same scenario. In this example, we have the monthly oversold starting to depressurize. Let me get my big cursor in there. Monthly's oversold starting to turn up, and we call this a hook. And then eventually it's going to turn and this would cross up. So notice on the monthly that started to turn up, what did the weekly do? The weekly ended up not only turning up, but gave us that hook and cross pattern. And this is something you'll hear a lot today, of a hook and cross pattern that we have been trading for many, many years now. And this hook and cross pattern is the key to success. As I will show you, that once the indicator starts to turn and hook on a particular time frame, like this weekly, that would mean the daily is not only oversold, but it's going to move from oversold all the way to overbought. So what happens when I get a hook and a cross pattern on the daily? Then that means the 4 hour that's oversold will move into overbought territory. And because we had a weekly and a monthly also starting to bottom, notice the behavior that the lower time frame exhibited. This will be a repetitive theme throughout. And notice the same. The daily gave us the hook and cross pattern, which meant the 4 hour would go from oversold to overbought. And then once the 4 hour starts to turn against the daily, as time frame would start to turn over against it, my daily would say, well, I'm still going higher. My weekly says I'm going higher. My monthly says I'm going higher. So you would expect this stair-stepping price action, in which price should pull back, but then it should slingshot higher. And notice it repeats itself several more times because the 4 hours following the direction of the higher time frame, so it ended up slingshotting several more times. This is what you can count on and bank on in advance. So our journey started many years ago, and I'll show one more with the gold in the same scenario, where we have gold starting to oversold territory, but starting to depressurize. And for a period, we had this slingshotting lower, but we expected it would fail and start to turn and go back up. Notice the time frame starting to align as my daily was oversold, my weekly was oversold, my monthly was oversold, and then finally the 4 hour. But notice the uniqueness of this, that the 4 hour, initially as the daily was trying to finish its down cycle, actually allowed the 4 hour to join forces, and the 4 hour started with what? Slingshotting lower and lower first as we were finishing that cycle, so that the daily could finish its own cycle, then start to turn up. And we knew this was expected behavior because the weekly was already oversold, starting to turn up, and a monthly was oversold, starting to turn up. So we knew we expected a portion of this to eventually go lower first, but then reverse in a massive reversal. And we call that the PAI hook. Well, for those of you that are visual, when we get a PAI hook, you're also going to get a little trigger for those of you that like an extra visual aid. But the key is just aligning the time frame. And that was my mission for many years, was to turn the software into a very easy to use and very user-friendly interface. And now let's go to the actual charts to show you what the software does in live market conditions. Start off with the euro yen. This is a trade that we place based on the time frames aligning in oversold territory. So my mission was, well, understand time frames, how they tend to cycle. And I also noticed from way back when that price action, whenever you look at a chart, in order for price to move higher, you would always see price move what? Lows, highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And as that process of stair-stepping higher, I delved into it very deeply and said, well, it's about the time frames. I notice every time markets tend to pull back, the time frames are overbought and they tend to want to cycle back to oversold. Well, if we can go back to the very, very basics, what this indicator is supposed to do, it's supposed to go from one extreme to the other, back and forth, back and forth, back and forth. Well, there are market conditions where, as you know, with certain indicators, they can stay in oversold territory extended periods, or they can stay in overbought territory for extended periods. But notice, every time it stays in overbought territory, we have the slingshot phenomenon. And every time we stay in oversold territory, we have the slingshot phenomenon in the opposite direction that's going down. So notice, price on a chart cannot move lower without time frame slingshotting lower, and price cannot move higher without time frame slingshotting higher. So this trade was taken based on the PAI hook and the trend momentum cross being oversold. And I knew that we were going to get a nice retracement to the upside. And this trade was placed during our live trading, and we're up 447 pips. Well, notice we have a market trade management system that was developed with all the same concepts in mind. The concept was to have the time frames align so that as soon as they aligned, I needed a sign to tell me. Well, that's where we worked on this PAI hook pattern. And I'll show you this briefly, but every time it starts to hook, it means the lower time frames are aligned. Think about that. Every time we get a hook, it means the lower time frames are aligned. And I worked at this for quite some time to understand that we need a lot of data in here to help us. So this is not your ordinary run-of-the-mill indicator. It's a proprietary indicator that has so much information in the background. It includes money flow. How much money is flowing in and out of the markets based on that time frame. We have volume built into our trend momentum, and we have all sorts of information. Most important is these indicators are very smart. They're aware of their surroundings. They know in relation to the time frames where the other time frames are located. Are they overbought? Are they oversold? Are they in between? And this process of aligning the time frames is where this software was born and why it's so effective. This software will never become obsolete in any market condition because it's timed and it's based on cycling time frame, and the time frames will always cycle. So as we go through the process, the challenge was to how do we end up getting this into a trade management system, into all of our tools. The concept was the aligning the time frame, and that was key. So we've developed this into every component, which we have many, and I'm not going to be able to show you today, but we're just showing you the concept. But the concept of the hook and cross pattern means the time frames are aligned. The concept of a slingshot, the slingshot phenomenon, the slingshot would not race off without the time frames moving, and then it wouldn't engage down without the time frames moving back down. So when you see the slingshot phenomenon, think about it as a daily moving from oversold to overbought that allows the weekly to depressurize. Then when the daily reverses and goes back down is what forces this to engage. So you can see from live time, we have a weekly starting to engage on a trade I'm in on the long side. I'm expecting a pullback so that my daily can finish the cycle. Just one second. All right, sorry about that. So the concept is that yes, we're bouncing today, but the daily is not turned yet. So we're likely to see this euro yen bounce a little bit till the 4-hour cycles and then push back down, allowing the daily to finish the cycle. Well, how do I know that in advance? Because my weekly is starting to turn over. Right? See, it's starting to turn over. We call that slingshotting lower. Well, why is it slingshotting lower? Because the daily is moving from overbought to oversold. And notice all this information is built in here. So for convenience, instead of having our users go to every time frame and say, well, Gary, how do I know this weekly is oversold and how do I know when it's overbought? We have a scanner that we built in these same parameters into, and it scans the market to tell you when certain entities, or in this case, stocks, futures, commodities, ETFs, bonds, may be in oversold territory lining up or they're in overbought territory. Well, the great news of that scanner is you can set it for the 5-minute, the 15, the 30. You can set it for any time frame and customize it on your style of trading. So I prefer the longer term positions. I've always been that way. Yes, I can scout with the best of them, but I prefer to trade longer term because I like getting trades with lots of pips or huge movement. So this is just one example of the euro yen. I was just showing the same concept every time. We entered this trade because it started to hook. And now it's engaging, and watch the cursor. I expect it's going to disengage and go higher in the coming weeks. When what? When the daily finishes its cycle. When the daily finishes its cycle, then we get a daily to hook. That's be the perfect entry to buy. Well, someone would say, well, what about this bouncing this morning? Well, again, if you're scalping, then the perfect entry this morning was when the 4-hour turned and hooked. Why? Because we knew when a 4-hour turns and hooks, my 1 hour is in agreement, my 30 is in agreement, my 15 is in agreement. Well, how do I know that? Because the software is automatically scheduled and set for that process. So as this turned and hooked, we got the hook and a cross. That means something. That's also why this is so important, because when you get a hook and a cross on a 4-hour, it means your 1 hour is going to move from oversold all the way to overbought. Well, how does that help me as a trader? Because by utilizing multiple time frames, we know that this 1 hour is expected to go from oversold to overbought. And along the way, we'll have a choppy road where it could possibly engage, disengage, but the bias is it's going to go all the way. And notice what it's done. It did exactly that. And every time you see that, whether it's a daily hook and cross pattern, like we had it hooking and crossing down, what does that tell us? That tells us the 4-hour is going to make the full cycle. So as a trader on the higher time frame, I know I'm going to have days of downside pressure as this 4-hour cycles from overbought to oversold. And this repeats throughout. Well, what about some other? Here's a pound odd. We're up over 1,500 pips. All of this information, again, is tied into all tools, our trade management system, our scanners, our indicators. It even ties into our Ichimoku chart. So it's unlike anything you've ever seen because it takes into consideration the multiple time frame. And this software is so intuitive. Again, it knows when the daily turns and hooks that my 4-hour must go from overbought toward oversold. And even in this example where the daily started to rally a bit, I called this out during our class. I said, don't worry about this weekly going up. It's going to go up and then turn and hook over and then finish its down cycle. Well, why would it do that? Because our monthly is in the process of engaging over, but it's going to fail, and then this will turn and hook out here. Why? Notice the price action. We had lows, highs, higher lows, higher highs, higher lows, higher highs, and we started to engage, disengage, engage, disengage, engage. And notice from this example, why are we going up here? Because the monthly was following the lead of the weekly cycling toward overbought. Then when the weekly went from overbought back toward oversold, the monthly engaged. Then the weekly what? Bottoms, reverse, and it goes up. And then the weekly's with, against, every time you see this process. So yes, this is expected, and this is expected to turn and hook out in the coming months. And this trade should go up several thousand more pips. And we're going to continue to monitor that, watching for these signs and symptoms. But in every case, since we had a low, we tried to slingshot lower, it failed. Notice this concept where it engages and disengages, Price always goes back to the previous high and makes a new high. It engaged here, disengaged, so it did what? It went back to the previous high and made a new high. Then when it engaged and disengaged, you're starting to learn something. Well, it disengaged and went back to the previous high and made a new high every time. Well, how cool is that, especially on a monthly time frame? When this engaged and disengaged, this was over 1,000 pip plus move. And we knew this based on the alignment of those time frames. And we have all the tools to help you align those time frames automatically, including the hook and cross pattern, our triggers, our slingshots. Everything is all about aligning those time frames. Here's the pound CAD, another one. This is another great trade. Yes, we're up over 300 pips, or right at 300 pips, and we're pulling back. Well, the bias is this weekly is going to turn and hook out in the coming weeks, and we're going to start bouncing to go higher in the coming weeks, because the weekly was expected to cycle down, and now the weekly is expected to cycle back up. And we'll be able to see signs of that. So when's a great entry to go long on the pound CAD? When this daily finishes its cycle. And we're already in oversold territory. So all we need to wait for is this simple little hook here. And when we finally hook, that's going to force price to start moving higher. And I'll be able to trade that back to the upside, or in this case, buy the hook and look for a new position for price to start moving higher. And I would be looking for this over the next few hours, not days, because the daily's oversold and my 4 hours engaging down at the moment. As soon as the 4 hour finishes, it either turns and hooks out, you go long, or what is a 4 hour? It's when the 1 hour goes from oversold to overbought, and then the 1 hour then goes from overbought back to oversold. So watch when I show you the 1 hour. It's doing exactly that, because the time frames are aligned and the software is aware of its surrounding. So when I see a 4 hour rallying, I know that's the 1 hour moving from oversold towards overbought. That's what allows the 4 hour to potentially form the slingshot. Then as the 1 hour turns over, you expect the 4 hour should slingshot down, because the 1 hour is expected to cycle back down. And that's why we use Ichimoku. This was an easy one. As soon as my 1 hour hooked for a scalper, you could have made a nice pip on this simply by waiting for the hook and knowing once it hooked that my 1 hour hook meant my 30 was aligned. And when I see a hook and a cross on the 30 minute, I mean the 1 hour here, see it, the hook and the cross, that means this 30 is going to do what? It's going to move from overbought all the way to oversold. It happens every time on every time frame, which is very interesting, right? So this is why when I start scalping to the downside, I know I should be in this trade for hours, not just minutes, because I knew the 30 would cycle all the way down. And again, that's why you align the time frame. So we could do this all day long. I have hundreds and hundreds of trades to show you this example, but for now, I want to put this concept together. I was in a webinar last week, and price was starting to move lower on the NASDAQ. And I was talking to one of the members that was in the class, and he said, Gary, what do you think is going to happen? I said, well, you want to buy this 4 hour when it finishes the down cycle and then turns and hooks. Why? Because our daily was still in depressurizing and getting ready to slingshot higher. My weekly, and I'll just go over this real briefly, the daily was starting to turn and depressurize, and we knew it was expected to go a little bit higher. So when the 4 hour finished the down cycle, it was an ideal time to buy it. And we knew what? Once it finally did the hook and cross pattern, that my 4 hour would be forced to push the 1 hour to overbought. My 4 hour would start moving from oversold towards overbought. And that forced this slingshot to engage back up, and we ended up making a new high. Well, this was interesting because people thought I knew it well in advance what was going to happen. I was in class saying, look, guys, expect this is going to stair step a little bit more, and you're probably going to see about 3 to 4 to 6 maybe hours more of the 4 hour finishing the cycle. And as soon as it hooks, I want you to buy this and expect we're going to go on and make a new high. Well, check out that move. The recommendation was to buy the 4 hour PAI hook. And once it hooked, it ended up in a 178.25 point move on the NASDAQ. Have any E-mini traders? Whether you're trading E-minis or, in this case, the Russell, NASDAQ? Anybody? Well, we don't just make a point or two. I know those guys, when they make a point or two, they die and go to heaven. Well, we consistently make 10, 15, 20, 30, 40, 100 points. Well, NASDAQ's a little bit different. It's a higher scale, sure, but it just increases the amount of the bounce. So this was an easy trade that was called well in advance, telling everyone exactly what the software was going to do. At the time of the webinar, this was still up, and I said, look for this to turn over, and as it starts to turn over, look for it to cycle back down, and when it finishes the cycle and you see it turn back up, buy it and expect it's going to come back toward the previous lows, bounce off the cloud, and then go higher. All this was said several hours in advance. Well, it's because of the multi-time frame analysis. Well, here's an example of the same thing, but with the S&P. And those of you for E-minis, this is something that you can expect to have recur over and over and over once the time frames are aligned. All right, so here's the S&P in the same scenario when that trade was called out. It too was where the 4 hour was bouncing and it started to turn over. And I was telling everyone, watch for this to finish the cycle. As soon as it does, you want to buy the hook, because then we're expecting it to bounce off the cloud and go on and make a new high. Well, notice what the S&P did in this case. It resulted in a 38.5 point move. E-mini traders, this is something we do every day, making dozens of points by simply aligning the time frame. And I could show you how, when, where, why, and in what we like to call painting the Picasso. I show you with my big red cursor exactly what the software is going to do, and as soon as it turned, you want to buy the dip. Then as it pulled back, you want to buy the slingshot to allow this to continue. Now this move was the initial bounce from here and move. This didn't consider going way up here and buying the dip. Well, this software, as the time frame cycle, is the ideal software for trend trading and for buying the dips in an uptrend or selling the rallies in a downtrend. But it gives you specific entries. Notice the same thing. You see how the 4 hour bottomed and reversed, then it started to slingshot. How did I know as a trader? Well, when do I buy this 4 hour slingshot? Well, the concept is as soon as we see it reverse and hook is when you should buy. But because of the cycles, we understand that this is where the 1 hour goes from oversold to overbought, and then it cycles down, allowing the 4 hour to depressurize, then it cycles back to overbought. So notice when I change to the 1 hour, it's cycling within the 4 hour, and we knew the 1 hour would cycle down first, then it would cycle back up so my 4 hour could depressurize. And as soon as the 1 hour bottomed in reverse, we knew that we had a high probability the 4 hour would engage higher. And this was another trade. If you do the math on that, this would have been another 30 plus point move higher, right at 30 points. Everybody see it? So you could have made a 38.5 point move. If you wanted to trade it back down when it cycled down, you could have, and then bought the dip in the uptrend. So the concept repeats itself. Well, what about other markets? Does it work in all markets? Sure it does. Any cryptocurrency traders out there? This is Bitcoin. I called this months in advance that Bitcoin was bouncing and was going to start to make a huge rally. How did we know? Same thing. The recommendation was to buy the daily when it reversed, because we were in an uptrend with the weekly bottoming and reversing. This was a trend continuation. Notice the weekly. The weekly hooked and it crossed. We call that the PAI hook and the TM or trend momentum cross. Why is that important? Because we knew the weekly was oversold and we knew it was time to depressurize. It was browbeaten after rallying way up and coming way down. It was time for another bounce. Because why? My weekly, my monthly, my weekly, my daily, my 4 hour, all time frames were oversold. So that's when I told everyone to get in this trade. Notice, this was a projected move based on the daily reversing, and it made a $2,417.53 move. Well, I didn't catch all of that. I'm up over 2,000 at the moment, or right at 2,000, but we're starting to pull back. Why? My weekly is still up. That gives us a lot more upside still to come, but we need to allow the daily to start to depressurize so it can slingshot higher, right? That's what we're expecting. Well, how do I know when to buy this? Same reason as the last time. We knew the daily would start to turn and hook when the 4-hour moved from oversold towards overbought. So when is this daily likely engage back up? Which it will in the coming days. It's going to slingshot higher, and I expect we'll break the previous swing point and continue up. Why? Check out the weekly. It's pretty simple. Well, this wasn't good enough for us in the early days because I don't like having students have to go to every time frame. It's a learning experience, but why not automate all of this to where we get a hook, then let the trade management system monitor the trade for you. That's exactly what we're doing. It's managing, it says trade in progress, and as soon as we get some new tick data, it'll populate again. So this is cool. That not only do I have all the time frames aligned automatically when it hooks, but that all that's built into a trade management system that'll allow me to trade it. Well, we go far beyond that. This trade management system's so smart because it knows everything. The indicators are all tying together, and that it would turn over and slingshot higher and higher. We rode this baby up, we rode it down, and we're riding it back up simply because of the cycles. Okay? And again, it doesn't matter what market you're looking at. It really doesn't, because it works the same in all markets. So let me show you what that looks like in one of the scanners. We took all this information and we said, let's make it easier for our users. Notice these little arrows dictate what direction the trend momentum is moving. Is it up? Is it down? So it's pretty easy to see the euro's in an uptrend today, and it's moving higher because look at the time frame. Up, 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 up. Notice how some of these are starting to turn. Other ones are straight up. That means these time frames are getting overbought, getting ready to start turning on the lower time frame, but we still have some of the other time frames still up. But most importantly, the big dog, in this case, the monthly, is still down. So yes, the euro's rallying up, but it's not going to go on and break new highs. It's going to make another lower high and a lower low when these arrows reverse. Well, we go beyond that. We show you when a slingshot's forming, when it's engaging, when a trigger forms, when it fires, when it's engaging, whether it's up or down. All information's at your fingertips. It tells you where resistance and support levels are, where the current price is, how many pips per ADR. Expect this process in the oil, whether it's a stock, gold, whatever. You can customize this to whatever symbols you want to view. And this would allow you to know, well, the ADR is a certain amount and how much have we moved per day. Well, the euro's already bounced considerably. So yes, the euro could go higher, but it tells you better be looking out to take profits because we're getting to the max level of the average daily range. All right. So that's what all this is. And again, I don't care if you're trading bonds, treasuries, really doesn't matter. It's the same. So expect on bonds that we're going much lower. Check out the monthly. The monthly's depressurizing, but it's been slingshotting. Same thing here. When we were rallying, I told everyone months in advance, this would not only go up, but it would go up and turn back over and head lower, and we would end up with a lower high than a lower low. Well, this is part of an A, B, C, D extension pattern, and this will come to pass, and we're going to end up down here at 126, 127 in the future. Well, why is that such a given? Well, Fed keeps raising interest rates, it pushes bond prices down. And the Fed's going to keep raising interest rates over the next couple of years, so we expect this is going to help continue to push and slingshot lower and lower. And notice my weekly's engaging. Right now, it's engaging down and turning. Why? Because the daily is moving from overbought toward oversold. And notice, the weekly not only started engaging, we got the hook and cross pattern, so it meant the daily would finish the cycle. And one last thing before I show you what we're offering today is how it ties into the Fibonacci's. Right? How do we tie into Fibonacci's? When you get a hook and cross pattern, the retracement equals a sweet spot location. So even on this small little time frame, we can see that when we got a hook and cross pattern, we knew that this would mean, the hook and cross pattern means that this would retrace at least to a sweet spot retracement before perhaps turning over. Well, how do I know it's going to turn over instead of going higher? Well, all you got to do is look at the direction of time frame. And my 4 hour was still down at the moment. That's why we expected this would start to slingshot lower. Okay? All right. Let's go back. So why should we? Here's part of it. You showed several trades that were already winning trades. Well, here's what you can expect on a consistent basis. Here's gold. We're not talking small move, $126 move. Gold to the downside. The alignment was there, the multiple time frame alignment. We got our triggers, we got our hook and cross pattern. And yes, this was a significant trade we took live in our class. And this was a $150 move. Continue. 8,600 pips on our trades. Our student was using our Slice of Heaven Finder, which aligns all the higher time frames, or you can obviously customize it to the lower time frames, whatever your trading personality is. He continued to let those trades run, and it went to 18,311 pips. Continuous success over and over. And we continue. Here's the pound odd. Pound odd started to move down. This is the one we're up over 1,500 pips to the upside. This is when we were trading it to the downside. And notice, this is showing initially at a 778 pip move. Well, we didn't just close it and say, well, that was a great trade, let's look for another one. We let it run. It continued to 1,274 pip. Well, the monthly was still aligned, the weekly was still aligned, so the daily kept slingshotting, and now it ran up to 2,270 pips. Well, Tanya still wasn't finished because we have the time frames aligned. It kept running to 3,227 pips. 3,600 pips. Here's another example, the pound CAD, 3,000 pips. Time frames aligned, the trade management system enters the trade for you, it continues to run. Here's some more. Pound yen, 3,215 pips. We trade all markets. This is just a couple of the currency pairs. And here's a software we call, one of the other tools called a breakout. And this is where you have price action that's locked in an area, and you can tell this software to, okay, I want to know after the first hour of trading what the high and the low is. The software calculates that for you. And then you can tell the software in the trade management system, hey, I want you to sell it as soon as we break the low. How cool is that? If I know I'm in a downtrend, I tell it to sell when it breaks the low, and it enters it automatically for me. Well, what if I'm in a zone and I don't care if it goes long or short. If it breaks the high, it can go long, or I could tell it to go short when it breaks the low. In this case, we told it to ignore the break of the high because we were in a downtrend and all we wanted to do is sell the downtrend. So as we go through the process, we see that was 272 pips on a quick breakout. Now, what is offered? We have the Premium Edition 3 software and our live trade classes. Meet 3 times a week, average about 7 to 10 hours of live instruction every week, and we go into the nth degree of detail. Now, software, scanner, I briefly showed you. Here's the other one you did not see today, but this is the one that aligns the higher time frames or the lower, depending on how you customize it to monitor for you. But it will allow you to never miss the next big trade. The Slingshot trade triggers, the Slingshot Phenomenon. It comes with our MPA trade management system. It comes with a Platinum Asia scalping system, a Triple P scalping system, which can be used on all time frames, a breakout trade system, and a bracket trade system, especially when you have a stock, commodity, future that's been range bound forever, and you can bracket it and say, okay, system, I don't care if it takes a day, a week, or a month to break it, enter that trade when it does. And this will be locked and loaded, and it'll enter it a week later, 2 weeks later, 3 weeks later, whatever it is when you're ready for it to enter, or 5 minutes later, depending on your settings. All right, why should we use the MPA PE3 software? Top 10 reasons. It automatically calculates support and resistance. You no longer have to guess, well, is this going to be support? Is this going to be resistance? It identifies the trend of every time frame. It automatically monitors and tracks the time frame cycles. Remember, everything I said ties into every component we've created. It provides consistent entries, exits, and take profits, utilizing the trade triggers, the slingshots, and the profit triggers, our hook and cross pattern. The trade management system is twofold. You can set it in advance to tell it, okay, as soon as this downtrend is over, I want you to buy the uptrend when it turns and hooks. So if I'm on a higher time frame, that could be days later before it does, but it could be in the set mode, ready to go. Or if you see a trade that's currently ready to go and you want to enter now, you can automatically enter it instantaneous, and then the trade management system will manage it from start to finish. As I said, it fits any trading style because it takes into consideration all time frames. The dual scanners are there for you to scan the markets for the next big trade. It works on 800 symbols, including stocks, forex, futures, ETFs, commodities, etc. It works on everything, and consistently delivers low risk, high reward, high probability trades, all by simply aligning time frames, and that we've automated for you by simply hooking a cross pattern, triggers, slingshots. All that is why it took a feat of the programmer to figure out what the sensitivity needed to be to match my alignment of my time frame. So that's something I worked on for an awfully long time. All right, so what's the special today? Today, we normally only offer like annual, semi-annual. We rarely will offer monthly subscription because we want our traders to be in our service, and once they're in, they stay in. FYI, over 90% of our members have been with us since day one. That means they've been with us for we're going on 8 years now, and that says something. You wouldn't stay with the service unless it worked. This service works. And so normally in the past, when we did offer a monthly special, it was $3.99 a month, which included the software and the class. Today's special for our attendees will be $2.97 a month. That includes the software plus the classes. Again, you get about 7 to 10 hours of live instruction each week, along with the software, all components. This is not a partially optimized or partially functioning software. Every component is fully functioning at the $2.97 price. Now, it's a great deal. Tanya, would you post the link for us? All you got to do is click on this link. When you do, it'll open up to our web page showing you can use, and it says that you'll get the MPA plus the classes for $2.97 a month. You fill it out and you're good to go. That's simple. All right, why should we? Well, let me first get this out of the way. I want to thank you for attending the webinar, and we look forward to you joining us. If you have any questions, please send an email to support@gpatrading.com. Why the MPA? There are a lot of softwares out there. Because ours is unique. It empowers you to read and anticipate price in any financial market, on time, in time, all the time. And the last slide we're very proud of. GPA Trading Services has been educating the world. We have over 123 countries and counting. And for some reason, if your country flag is not on this world map, we welcome you to join us. And as soon as you do, your country flag will appear on our world map. So, as I have a few more minutes left, I would like just to review the process. And again, I don't care what the market is. All you're simply doing is patience to align the time frame. Well, I knew aligning the time frames would be a huge advantage because every time they were aligned, that's when price moves. And you look at any chart, you can take Bitcoin, any chart. Whenever price is moving higher lows and higher highs, common sense would say, well, that's an uptrend. That's the definition. Well, the uptrend could be on a lower time frame, giving you higher lows and higher highs, when the big picture may be that you're in a true downtrend. So that's why it's always a good idea to know your surroundings in any aspect of life, but especially trading. Well, if I align the time frames, I say this every day, don't trade without the 4 hour, we call the foreman and the workforce. We need these lower time frames aligned so that we can get the move we're expecting with the highest probability outcome. Well, if you do so and you're actually in the direction of the higher trend, that'll continue this for considerably longer. So yes, I expect Bitcoin still will climb higher, but we need the daily to finish its little depressurization. And watch in the coming days, this red line is going to turn up and it's going to hook, and price is going to bounce, and we're going to go on and make another new high. And the good news is I don't have to wait and say, well, how do I know when this is finally going to turn? I know it's when the 4-hour finishes the down cycle. So Bitcoiners expect Bitcoin is going to go a little bit lower, so the 4-hour finishes its cycle. And then when it does, and we turn and hook, that's when we want to buy this. All right. So with that, I'll say thank you for your time and attention. We look forward to you joining us. And Tanya, thank you for the opportunity to present today. God bless you. Y'all have a great day.